So I'm Jack with Jacked Up Finance, and these are the 4 macro trends I think will be massive the rest of 2025. So we can start it from the top. Unsurprisingly, interest rates. Interest rates, I think, kind of hit every piece of the economy. Debt is a huge part of the economy, whether you like it or not, and the Fed and the interest rates impact really every piece of it. So especially with kind of the turmoil that's been going on between Trump and Jerome Powell recently, there's been more and more publicity for interest rates, and specifically the federal funds rate. But regardless of that, regardless of kind of the turmoil and kind of the squabbling that they're having, interest rates will be incredibly important for the rest of 2025. So kind of think about the path of the federal funds rate. The federal funds rate doesn't impact every single, or I guess it doesn't impact every debt rate one for one, but this is kind of the main benchmark rate that most everything is kind of based off of. So as you can see here, we had kind of the zero interest rate environment, or kind of free debt, so to speak, until around February 2022. This is when we increased it as we had the pretty massive inflation. So we wanted to get a handle of that. And now we kind of held for a couple quarters, and then we reduced it for a couple quarters to kind of get where we are right now. So we're at 4.33%. I think even just 2 days ago, they decided that they're going to keep interest rates flat. So we're still kind of still on this flat plane right here. So as far as inflation, you can see inflation is coming down a good amount. This is actually, so you can see it's our most recent quarters or most recent month was at 2.7%. So it's actually come up a little bit. Some people think due to the tariffs, and we can also kind of see it on this chart as well. So you can see we were at about 8.6%, 9.1%, pretty massive inflation. And it's now kind of steadily come down since then until we can have this little bit of a bump up here. So inflation is definitely slowing. I don't think it's getting to the 2% that Jerome Powell really wants and what he's trying to get to. But I also think the uncertainty with regard to how the tariffs are going to be priced in are a huge part of his hesitancy as well. So I mean, inflation is an extremely important part of what's going to determine the federal funds and what they want to do with that. But secondly, unemployment is a large part of it. If unemployment gets extremely high, they might still decrease rates, even if inflation is high, as they want to protect the job market. So you can see here we had, I think these are just the COVID layoffs. These are the COVID layoffs that kind of pushed it up so high. And inflation, where unemployment is still quite low, it is ticking up slightly. So kind of what we're seeing is maybe a little bit of a tick up on the inflation and a little bit of a tick up on the unemployment rate. But it's tough to really get a great sense of the data based off just a couple months of uptick. Like a couple months of uptick here, really just 1 month for the most part. And same thing with unemployment, ticking up slightly, but it's tough to really know how it's going to fall. This is another chart. So essentially with the interest rates, my personal opinion is I think in business, if you wait for all the data for every single decision you're going to make, you're going to miss the timing of it. I think a lot of the money that you make in business is all about timing, and then ultimately you have to make an educated estimate. I'm not going to say an estimated guess because I don't think that's the right word, but ultimately you have to make a decision. If you wait for all the facts to make that decision, you'll be too late. You'll miss the opportunity. So I think Jerome Powell kind of needs to make a decision either way. If he wants to increase rates because he thinks inflation is still rampant, or if he wants to decrease rates because he thinks inflation is slowing, great, make a decision, make it happen. But I think this holding pattern that he's in, where he just wants to wait for all the data, that's never a good business decision. If you wait for all the data, you will miss the opportunity. So I think he needs to make a decision either way and go with it. But this kind of sitting on the fence strategy, I just don't really think works for anything. So, secondly, crypto legislation and incoming ETFs. So I think crypto is a very interesting space right now. I think crypto is in an interesting spot in that I think maybe 4 years ago, crypto is kind of where AI is right now. Meaning that 4 years ago, crypto was buzzwords, hype, not many actual use cases yet, but still interesting. And I think that's where AI is right now. Maybe the AI hype train people will get after me on this, but I think 4 years ago, it was kind of all hype, not many use cases, and now I think it's flipped. I think what we're seeing in the crypto space right now is we're seeing not necessarily depressed valuations because they've come up a good amount, but especially in kind of the alternative coins, we're seeing some pretty great buying opportunities, but also some incredible use cases. I think all the hype that happened in 2020, 2021 has turned into some very valuable products that increase efficiency and security, and I think it's a very interesting time to be in that space right now. So let's talk about some of the legislation. So most recently, there was a pretty big crypto week So specifically kind of the Genius and Clarity Acts. The Genius Act was passed. The Clarity Act is still in the process, but what's also just super important for this industry is just getting regulatory clarity. So of course, I mean, unsurprisingly, they call it the Clarity Act. So the space is growing a lot, but legislation and regulation isn't always good, but at some point you need guardrails. And I think that's what this is providing. So I think these guardrails will provide more clarity, more opportunity for just kind of a cleaner system, and I think it'll help a good amount. So this is incredibly important in kind of the crypto industry, maturing as an industry, and really kind of becoming legitimate as well. So the next piece of this, I did say incoming ETFs. So kind of what we're seeing right now is I would call it maybe the second wave of ETFs. So of course we had the Bitcoin ETF first, then the Ethereum ETF, and now I would say we kind of have the next wave of ETFs. So specifically an XRP ETF, I think we're looking at about a September, October 2025 approval. I think Solana is kind of roughly in the same bucket. And then some people are even saying kind of coins like Dogecoin, but point is kind of this next bucket of ETFs. We've already done the Bitcoin, we've already done the Ethereum, kind of the gold standard coins. Now we're kind of getting into the altcoins, of the alternative coins. And that'll be kind of the next wave, I think, of the ETFs for crypto. So I think XRP is probably the next closest. Solana is probably pretty close as well. And then after that, I'm not really sure where it's going to go. Next, kind of already talked about it briefly, but it's the AI arms race. AI has just been growing astronomically with OpenAI and Meta just pushing seemingly every dollar of resource they can put into it. And also Elon Musk kind of newest Twitter/XAI platform. But the hiring we're seeing in the space, I think, is unprecedented. $100 million pay packages at Meta for these AI acquisitions. I mean, some of what they're doing is they're acquiring companies. Some of it is they're doing kind of acqui-hires, so they buy a company with just the purpose of buying the employees. And they're also just kind of creating skeleton companies where they poach the CEO and kind of a couple of the main players with incredible pay packages. And then that company's kind of a shell of what it was. So it's definitely a fascinating place to look at right now. Just the sheer amount of money that Zuckerberg is throwing at this space is, I think, unparalleled from what I've seen so far, beyond just kind of maybe starting a firm like he did. The pay packages of $100 to $300 million is just astronomical. So it'll definitely be interesting to see how that plays out. Maybe in a couple of years we see Meta being the AI company in the space, in which case it'll be absolutely worth it. But their cost is absolutely going to increase, so it'll definitely be kind of a tricky line, especially in those earnings calls for the next couple quarters. So that's really all there is for that one. It'll be interesting to see if he kind of keeps that massive AI investment, but also maybe if we see some kind of fruits of that labor, fruits of that investment at the end of this year, maybe early next. So it'll definitely be something to watch out for. Lastly, trade and tariff deals. So we did kind of get some more clarity on this even last week as we kind of have these new tariff rates. Specifically, these are kind of some of the higher ones. But kind of as I said with interest rates, the interest rates and the tariffs and trade deals are pretty much tied exactly one for one. It's kind of this battle between Trump and Jerome Powell. It's a battle between interest rates and tariffs. And we'll have to see where it comes out. If we get some more clarity here and maybe we see a couple months of these tariffs being priced in, and then Jerome Powell gets kind of some clarity on where it's going to impact inflation, you might see some lower rates. Or maybe these tariffs create hyperinflation. I don't necessarily think that's going to be true, but it could. It could create hyperinflation, and maybe we see interest rates increase. And I think that's Jerome Powell's point where he wants more clarity. So I mean, either way, tariffs, whether they go in effect long term or they're just kind of here for a couple months and then leave, they're going to be incredibly important for the rest of 2025. They impact the interest rates, GDP, really everything in between. So definitely a very important kind of item to look out for this year. So in conclusion, interest rates, of course, I think they really hit every corner of the economy. So maybe we'll see a couple 25 basis points or kind of 0.25% decreases through the end of the year, maybe not. Crypto legislation and incoming ETFs. I think the crypto space is kind of in a maturation phase right now, which is extremely important to kind of becoming more of a legitimate player in kind of the global economy. And I think this is something that's been needed for a while. AI arms race. AI, I think, is a very it's a very early stage product. I think it has great potential, but I don't think we've seen the use cases yet. So it'll be interesting to see if kind of the investment that Meta and OpenAI have been putting into it will be worth it. But it's definitely something to watch. And then lastly, the trading tariff deals. I've said it before. This and the interest rates are pretty much tied together one for one. So these will be crucial for the next kind of couple months, but also really the next couple of years, so we can see how long they really are in the market. So these are my 4 macro trends for 2025. Hope it was helpful. Hope it was interesting. And we'll see how these look for the rest of the year. Thank you.